Welcome back to Yahoo Finance Live. In today's Startup Spotlight, exploring the truth behind a V-shaped recovery. We've talked about it in some sectors that have clearly seen that play out. But what about America's startups? We're seeing a V-shaped recovery there as well. Let's break that down a little bit in today's Startup Spotlight. Joining us for more on that is the pride and joy of Brazil, Henrique Dubugras, CEO of Brex, a startup that skyrocketed to a $3 billion valuation by helping other startups access company credit cards. Joins us now. Henrique, good to be chatting with you again here. I know you have insight into this since you work so closely with startups and their spending. What have you seen in this recovery when it comes to them, and how strong of a bounce back you're seeing play out?
Yeah, so first, thank you for having me. I think that this is probably the strongest I've seen, startups and venture capital since I got to the US. Seed deals are being chastened after. So much money has been raised. Since we launched our Brex Cash product, which is a bank account replacement, we've seen so much investment coming in from VCs at a pace that we haven't even seen in 2019. The other interesting thing that we've saw is that there's so many SMBs that are being created right now that are looking more and more like tech companies. So, the traditional retail shops, instead of opening a second location, because that's obviously a bad idea right now, have been expanding online, or the traditional restaurants, instead of expanding to this nearby city, have been building cloud kitchens for delivery. So we've seen a lot of very interesting trends across digitally enabled companies.
Yeah, can you elaborate on that a little more? You've talked a lot about how you are seeing this huge boost in spending from startups, but the way in which that money is being spent is not the same. So there's a lot more investments, for example, being made in software. What does that tell you about the pivot we've seen from some of these companies during this pandemic?
Yeah, I think, when it was March and April, our volumes were down a little bit because basically T&E spend was down. So restaurants and Ubers, those weren't happening anymore. And then quickly by June, we saw that our average spend by customer kind of came back to where it was on a pre-pandemic level. And we thought it was really weird because people weren't going out that much. But just turned out that they were spending so much more on things like software, SaaS, servers, even advertising got a huge boost. So, that's been super interesting. I think it also explains a lot of the stock market giving so many multiples and valuing so much SaaS companies, because the spend there has definitely increased.
Yeah, and Henrique, when we talk about kind of the shakiness, obviously, as a company that's lending to other startups that traditionally might be a little bit more risky than some other more established companies, there were question marks around what you guys might see in 2020 and then now into 2021. But it seems like we're out from the worst of it, especially if you guys are seeing a quick recovery here, now 5% higher in terms of spend since before the pandemic. How much of those fears may still exist in terms of what you're seeing in working with the startups, and where you think like funding is at a fundamental level behind the scenes?
Yeah, so behind the scenes, what we were seeing during the pandemic, which wasn't being reported, was a large amount of unannounced fundings, right? So VCs were helping their companies get through the temporary coronavirus. Now we're seeing so much activity, basically assuming it's over from VCs and assuming 2021 is going to be a great year. I personally think that 2021 is going to be a super strong year for tech, because with the proceeds of all these IPOs going back to venture capital, it's definitely the asset class that has the best returns right now. So I think that's going to pour back into startups.
There's been a lot of chatter about companies, quote unquote, moving out of Silicon Valley. And you've heard them, whether it is Oracle or HP, some of the founders like Elon Musk moving out of the Bay Area. You and your co-founder also among them, although you moved to LA, so not outside of California completely. I'm curious what you make of this conversation that's playing out right now. Is the exodus out of the Bay Area, is that exaggerated, or do you think the epicenter really is, in fact, shifting a bit?
I do believe that this is different than other times. I've seen a lot of arguments saying that, people exit the Bay Area all the time and then they come back. At least for us, I think this move to remote work, we're one of the first companies to announce that we're a remote first company right now. And, we're going to have offices again, but you're not going to be required to go to the office And and if you decide to move out of the Bay Area, we also announced we're not going to readjust compensation for 4 years. So we've definitely seen this push out. I believe, though, that for starting a startup, still the Bay Area has some advantages around the network there. But if you already have an established startup or a company, in my view, there's not that many advantages to not expanding or hiring outside of the Bay Area. And then if that is your choice, then you can choose to live wherever you prefer to live. Pedro and I always wanted to live in LA, but we never found a business reason to do it. But now with remote, we just get to pick wherever we want to live. And it's still close enough to San Francisco, we can fly in and out for the day if we need to.
Yeah, and I bet you have a lot more options in hiring too, being able to hire from diverse regions. The CEO of Brex, Henrique Dubugras, it's great to talk to you today. Thanks so much for your time.
Thank you.